Good morning, everyone, and welcome back to the Market Caller session. How are we doing this morning? Hope we are good. Hope we are fine. How are we doing? How are we doing? Hope we're good, Mr. Joshua, Mr. Emmanuel. Welcome to um, London Session Market Caller. Okay. Thank you so much for joining. A quick one, please ensure you help us to share this link to as many as possible, friends, people you know, and traders also that you know that are interested in trading. You can help us share the link. I saw your comments. Doing well, thank you. Awesome. So this morning we'll be looking at the US market, right? The US equity market, US 100, US 30, and S&P 500, right? Again, the US 30, US 100, that's NASDAQ, and also S&P 500. The market has really been interesting. So far, so good, right? We've been seeing a sort of, trade war going on between US markets and China, right? White House versus Jinping. And it's been interesting so far. Lately, for those following, you will see that US have also, not US, China, they've retaliated, right, back. And what we're expecting from China, that they were going to retaliate on the latest tariff that they were given, right? They've slammed on US 125%, right? Is that correct? 145%, I think, on the United States government for also giving them the first reciprocal tariff. Now we are waiting and watching how the White House is going to react to it. Of course, Donald Trump is not somebody to take a back seat in this kind of situation and circumstances. It most likely going to probably increase China's tariff again to over 200. I think that's the next number I'm projecting. I'm looking at probably 200% on any goods coming from China, and that will be chaotic. That will be extremely chaotic. All right, but so far so good. Let's look at what the technical market is doing. All right, technical analysis, what is happening in technical analysis, right from where we left it last week. Last week we saw this rally to the upside, and then we said on the 4-hour time frame that this breakout block is going to be respected. Of course, it did, right? Because it was very, very massive, very, very solid on the 4-hour time frame. You can see that the breakout block was respected. And even though we saw a minor shift a little bit downwards, we are expecting that apart from breakout block, we had also fair value gap. That price is going to touch at least 50% of fair value gap, right? We start seeing that reaction of 50%, which is this zone here. Add all of this level marked out. Okay, let me delete this. Right, and we saw that price actually, tapped into it further down and then rejected upwards, meaning this level is quite significant, very, very significant. And from there, we've been seeing price push up to the upside again, right? It is quite interesting to note across board, both US 30, NAS 100 and S&P 500. We mapped out this level because we had almost the same price action across board for 3 of them. Coming to the 1-hour time frame, we can see that price rejected off. By the time we align it properly now, we'd see that there's actually another fair value gap, which corresponds with the one we have on the 4-hour time frame. However, this one, obvious, it's very obvious. You can see the price actually bounced off in actual terms. By the time you remove your wick, you see price actually bounced up from 50% of the fair value gap, right? Which shows that that level was quite significant. Then we're seeing a bounce up again to the upside. This morning, what are we looking at? We are looking at 2 things, right? From the fundamental perspective, I'm waiting for responses from the White House, how they're going to react to this new tariff that's slammed upon them by the Chinese government. I want to see how they respond to it, right, in actual, economic them, are they going 200%? Are they going 250%? Are they going to the max, say 400%? So that will also determine a long way what will happen across board for the S&P 500, US 30, and the NAS 100, especially the S&P 500, right? So this morning, technically speaking, we are still very, very much in a bearish condition. If you look at it very well, we are still very, very much bearish because technical wise, the price are broken all the lower lows, right, that we have, all the previous lower lows here, higher lows that's broken all of them, and then including this, and currently this looks like a retest, right? This looks like a retest that we are looking for. But then, if you remember our conversation from last week, right, we mentioned clearly that we are expecting a buy all through this month if the inflation, if the tariff, game cools off a bit, right? Meaning if we don't see any major retaliation from the United States as regards to this tariff that they've been given, then we should see some level of stability coming again into the market. Of course, Donald Trump has said he's giving a 90 days pause on anything concerning tariff, right? But then this kind of action requires immediate response. So usually that's what we see. But if we don't get that immediate response and everything is softened, it might also improve investor, confidence in this market, and then we'll see that rally to the side gradually, not with much momentum, but gradually we should begin to see that rally to the upside. And if that is the case, that we don't see major retaliation from the White House, then we can wait for a shift of structure, a shift of market structure to the upside, right? By the time you go to the 1 hour time frame, you see a shift of market structure to it being bullish. However, on the daily time frame, which is the higher time frame, and also very significant, we've not seen that shift yet. So one of the things we'll be doing is we just wait for that shift to happen. Where will the shift happen? Somewhere around here, right? Want to see a quick shift to the upside, then we can say, okay, this market is beginning to, return to the bullish move that we have. Technically speaking, what we have now is a bearish market. It's a very bearish market. And that is why we are not even doing more of technical, right? We're just using technical to map up where to enter and where to exit. What is driving this market as we speak in 2025, we've been saying it over and over again, is purely fundamental, purely what the White House is doing, right? Global economy, has always been the major driver, but this year, especially in the last 3 months, we have seen it to be the major one pushing and driving momentum in this market, right? So that being said, on the daily time frame, we are still very, very much bearish. If you want to use a Fibonacci to measure it, you have something like this, right? But then price is currently at 61.83 level. We saw that rejection to the upside. Of course, there's a inefficiency in price here, which I'm sure price will definitely feel, right? Price will definitely feel this void. So most likely, we want to see a buy to this zone. We want to see a buy to this zone, and probably this zone being violated again in response to the soft retaliation from the White House. This zone will be violated, and then our buy will keep continuing, right? But then if we see any sharp response also from the White House retaliating to the Chinese government, then from this zone that looks like a fair value gap that I've marked out, we should see that sharp drop, right? We should see that sharp drop to the downside. Let me use of course, on the 1 hour time frame, it's very, very clear now. Right, on the 1 hour time frame, it even looks as if it has been, filled, right? Price filled, came back, filled all of this, and then is going back, came down again, right? We saw that feeling a little bit, and then a drop to the downside. So we'll be watching how this market is going to react off this zone on the daily time frame. That will give us also large perspective on the intraday time frame, looking at what the market would do. Let's see if you have any opportunity on intraday time frame. Okay, it seems we have something here. It seems we have something here, like a sweep, but it's not really clear. Probably by the time we look at S&P, we look at US 30 and NAS, we should see a clearer setup. This looks like a sweep. This zone looks like a sweep, and then price Price hasn't even broken this yet. Price hasn't broken this level yet. This one above, not seeing the break of structure yet. So want to see a break of structure and then price coming back to tap all of this zone, right? Probably price moving up from this zone, breaking this, and then coming back to sweep all of this liquidity. All of this will now serve as structural liquidity, which price is going to sweep, and then we'll start seeing that push to the upside again. So quickly, let's move to a US 30, right? Before we finally stop at NASDAQ. That's US 100. Also, the same analysis across board for all of them. We saw that rejection of the 4-hour order block. We could have taken this trade like literally just putting a pending order and you're sure you'll be up in some profits, right? Except for the fact that across some other pair like US 30 and NAS, we saw that further drive to the downside. Price extended a bit, the week, right, extended a bit beyond this breaker block. But if you are using the fair value gap to measure it, you'll still be in a very good profit, because the fair value gap, your entry will have been on the 50% of the fair value gap, and then Esther will be below 0% of the fair value gap. Of course, take profit to be 1:2 or 1:3, depending on the case, right? And so we have this going on the daily, on the 4-hour time frame. Have this going on the 4-hour time frame. This looks like a box pattern. However, because of our current position in the market, I'll most likely just be watching and waiting for what fundamental is saying, what news is coming out to support my buy or sell position. Anything I'm taking in this market in terms of position in the market, I'm strongly looking at fundamental, right? If there's a fundamental that comes out that suggests that we start selling, then this would be a very good point for us to time the market and start selling to the downside, because of course you have this perfect sweep to the upside and then a sharp break to the downside, in fact giving us an inefficiency. This, my friends, market is going to come and feel it, right? There's no inefficiency in the market. It's definitely come and feel this gap that we have here, right? So if that is the case, we expect this buy to really push to the upside, get into these levels, and also from these levels we should have seen that sell-off again, right? If fundamental also supports it, right, we should start seeing that sell-off happening again, in this market. On the 1-hour time frame, what are we seeing so far on the 1-hour time frame? On the 1-hour time frame for intraday trade, nothing really clear. Let me go to 15 minutes. In the 15 minutes, there's no sweep. This would have been a very good setup if we saw a sweep, but then this was not a sweep. In fact, it's just like structure continuing, higher low and higher high, higher low, and doesn't form the new higher high. So for this, we want to see a clear, for those trading the box pattern, right? We want to see a clear sweep and a break to the upside. This is not a sweep, and we've not even seen the break yet. So for the lower time frame trade, intraday trade might not necessarily see something now, which is the London session. Probably towards New York session, we'll revisit this market again, and then by 2 p.m. we're going to revisit this market, look at some things in the market. If price has really changed structure, or we've seen that sweep across board, we still have few hours to, not few, significant hours to 2 p.m. for us to start scouting again on the 15-minute time frame for trade setup. But for now, what we have is really, really not obvious. Probably let me look at 5 minutes. 5 minutes is still not very, very clear. There's no that clear shift, sweep of liquidity and then change of structure to the upside, right? We've not seen that clearly yet. And until we see that, we might necessarily not, take any trade in the market. All right, that being said, we would move to the last one for today, which is the US 100, right? The US 100. For US 100 on the daily time frame, it's also what we have across board, right? The same thing across board. The analysis we looked at last week Of course, US 100, in fact, respected our analysis very, very well, right? We saw that tap into the breaker block, and then it's beginning to, push to the upside again, right? Which is very, very good. For now, the analysis so far so good is looking very, very much bearish, right, on the daily time frame and on the 4-hour time frame. However, we are strongly waiting for fundamentals, right? On the lower time frame, in fact, even on the 4-hour time frame, we're beginning to see like a shift, right? We're beginning to see like a shift in structure. But what we confirm that shift of structure is how the US market is going to retaliate to what we have going on currently, right? And also investors' confidence in the US market that will strongly determine in a long way what we have, whether we're having a bullish, we've seen a resumption on that bullish move we've had so far, or the market continues selling off to the downside, right? So this is what we have on US 30, and this is what we have on US 100, and also on S&P 500 this morning. Let me know if we have any question this morning. Do you have any question regarding the analysis? Emmanuel, Joe, Joshua, Oladipo, Oroma, do we have any questions so far, so that we can look at it together? And also, what's your thoughts on the global markets now, especially what is happening? You remember we've been shouting that the best place to take trades now has always been gold, right? Gold, economic tension, investor, two global economy fighting themselves, the best way, just run to gold, right? Because investor will also want to, run to a safe haven asset. And for now, what is serving as a very strong safe haven asset is the gold market, meta market. Right? Emmanuel said, no question, no question. All right, Joshua also, no question. Thank you for your analysis. Thank you. You're welcome. So far, so good. If you want to really, really, bank on all of this thing that's happening, I think we should move to gold as trade setup for intraday, right? You're looking to catch the market, provided the whole economic war or global trade war is still happening. The safest place to take trade will be on metals, because people are really, really, panicking. And then once people are panicking, they move their money to where they think it's safe, right? And in and out of any global tension, gold still remain gold. The value of gold still remain very precious. And that's why it's rallying to the upside. All right, thank you so much, right? We'll be meeting again by 2 p.m. for the New York market color session. And by then, we'll have everything we want in terms of analysis, in terms of what's it called also, in terms of trade setup. We have a clearer trade setup. We have something more perfect for us to look at. For now, the price action we have is a bit dicey, not really clear. So we don't want to, double into all of that. All right, thank you so much for joining. We meet again by 2 p.m. for our New York market scholar session. Ensure that you use your proper risk management. Ensure you don't overtrade. Ensure you don't oversize, so that you don't get yourself bonds or your account, right? Thank you so much, and we'll see you by 2.